Welcome to episode 4 in our online series of Money Smart for Older Adults, brought to you by the Elder Financial Safety Center at the Senior Source. My name is Carl Burlbaw, and I am the insurance counselor for the Elder Financial Safety Center. And in this episode, we will cover why we need insurance, the types of insurance that we use, insurance fraud and the impact that it is having on older adults, and Medicare fraud and what you can do to try to prevent it from happening. When it comes to insurance, there are two main points to be addressed. Number one, does it meet your needs? Is it appropriate for your lifestyle and for your loved ones? And number two, is it affordable? Because it does not make sense to purchase insurance if you are unable to make the premium payments and then ultimately you lose the coverage. Some reasons why we need insurance. For security, knowing that if something were to happen, you have the coverage in place. For protection against the unexpected and the unknown. And ultimately, insurance helps manage risk, the risk of financial disaster. We encounter different levels of risk throughout our lives, and insurance reduces our exposure to these risks. The areas of risk that insurance helps to avoid exposure are as follows: health and medical, long-term care, life, property and casualty. We will discuss each of these areas in terms of need for insurance. Health insurance is designed to reduce our exposure to high medical bills, such as hospitalization or treatment for chronic illness such as cancer or diabetes. It can provide benefits like preventative care with the idea of avoiding long-term illness. Many plans include a high deductible option to lower monthly premiums and coinsurance, which means the insurance company will cover a substantial portion of the cost, but not 100%. For some patients, prescription benefits are needed. The most important thing when it comes to health insurance is, does your doctor or doctors accept your plan? Because there is no value to owning a plan that you can't use to see the doctors that you want to see. In discussing the risk of needing long-term care, we are talking about activities of daily living, which are listed next to the picture on this slide. Here are some numbers that speak to the need for and cost of long-term care. The average cost for skilled nursing is $7,190 per month. The average cost for assisted living care is $4,150 per month. 64% of claims paid for long-term care insurance in 2018 went to female insureds, which speaks to the fact that females live longer than males. So then the question becomes, how does one afford this type of care? Traditional long-term care insurance has been around for several years. However, it is slowly going away because of cost, and people are living longer than ever before. Other ways to try and pay for the long-term care are annuities, which are incremental payments over an individual's lifetime. A person can use their personal savings or money earned from investments. Medicaid is an option when you have exhausted all of your assets, or there are hybrid insurance products that we will discuss later in this presentation. Life insurance is designed to address the loss of income for someone who has loved ones who depend on them for their future quality of life. Also, it can offset long-term debts, such as a mortgage. It's important to keep in mind that life insurance is protection from the unexpected and should not be viewed as an investment tool. There are two different types of life insurance policies. Term is designed to cover a person for a period of time, usually when they are in their prime income earning years. There is no cash value attached to a term policy, whereas a cash surrender policy allows a person to borrow or take out a loan against the policy. It can take as long as 15 years or so to build up enough cash value to borrow from. Many people will allow a cash surrender policy to expire after 3 to 5 years because they are unable to keep up with the premiums. Earlier, when talking about long-term care, I mentioned hybrid products as an alternative. These insurance options offer both life and long-term care in one policy. The reasons behind this are, number one, people are living longer, and are finding it difficult to keep up with increasing long-term care insurance premiums. So these policies can be purchased with a one-time lump sum premium. And number two, if a person has been paying long-term care insurance premiums for years and suddenly passes away, there are no benefits with a traditional long-term care policy. This type of policy covers both sides of this equation. Asset-based is a term you might hear that applies to an annuity that can be used to pay for long-term care services. I want to touch on underwriting, which is the process by which insurance companies gather information, such as the items on this slide, to determine a person's risk factor. And thus, are they eligible to purchase a policy, and at what cost? This is used in life, long-term care, and some health insurance policies that look at pre-existing conditions. Each company will use its own set of criteria for underwriting an individual. In terms of property and casualty insurance, when it comes to homeowners coverage, it's important to understand the difference between replacement cost versus actual cost value. Replacement cost will pay the cost of the loss regardless of age, whereas actual cost value factors in the depreciation of the item. For instance, a roof that needs replacing, if the roof is 10 years old, then actual cost will deduct the age of the roof from the replacement cost. Liability coverage is important when it comes to auto insurance because if you are found to be at fault, you could be sued for not having the right amount of coverage. Your credit score is a factor in determining whether a company will sell you a policy and how much it will cost. If you are financing a car, you might need gap insurance to cover an unexpected total loss of your vehicle to avoid owing money to the lender. After a certain period of time, you may not need to carry the gap insurance, so check on the value of your vehicle and the amount you owe on the loan. Many people do not know where to turn when it comes to finding a reliable, trustworthy source for purchasing insurance. If you have a preference for a particular company, you can contact that company directly and speak to a licensed agent. We recommend always seeking unbiased resources for any type of financial product information, such as the Elder Financial Safety Center. In terms of insurance, the Texas Department of Insurance is a solid source for information on companies and individual agents who conduct business in Texas. Regarding insurance fraud, older adults are being targeted in the areas of life and health insurance, and it's because they are more likely to feel they need these types of coverages, and many worry that they will become a burden to their families if they don't have enough, and thus they buy more than they need. Don't be a victim to high-pressure sales tactics or other means of solicitation that can ultimately do more harm than good to your financial security. Medicare fraud is a $60 billion a year annual problem. It's a combination of fraud, waste, and abuse. An example of fraud is when doctors write false prescriptions for home health services or other Medicare-approved benefits. Anytime someone other than your doctor asks for your Medicare or health insurance card, that is considered fraud because they are billing Medicare for that service. An organization that is leading the cause to protect Medicare from fraud, waste, and abuse is Senior Medicare Patrol. They train volunteers to go out in the community and teach the following: detect inappropriate activity, protect your Medicare information from getting into the wrong hands, and report any possible fraudulent activity to be investigated as criminal. Protect, detect, report. Here is how you can find your local Senior Medicare Patrol chapter in Texas. For more information about insurance and other financial matters that you may be concerned about, contact the Elder Financial Safety Center at 214-823-5700 and press 1, or email us at efsc@theseniorsource.org. Thank you.